Hey, welcome back. It's Jason Walter here. In today's housing market update, I have a lot of news to share with you today, especially regarding mortgage loan forbearances, mortgage delinquency rates, as well as new home construction stats. Lots of interesting stats to share with you today, so I hope you get a lot of value out of this video. Also, if you appreciate real estate market updates just like this one, please hit the like button. I greatly appreciate that. Also, if you want 4 free stocks, then click on the link below because for a limited time, Webull is giving away 4 free stocks when you deposit at least $100 on their platform, and that promotion ends on November 30th. Okay, let's go ahead and dive into the video, and let's first go over a report from Black Knight regarding mortgage loan forbearances. If you're not familiar with Black Knight, they provide data and analytics to the real estate and mortgage industries, and right now they're doing a weekly update about what we're seeing for forbearances. So let's go ahead and dive into the video here. So Black Knight reported just a few days ago that we've had forbearance volumes have actually edged up slightly this week. And this is after falling 273,000 or 9% over the past 2 weeks. So let's go ahead and then take a look at these numbers here. So they report that there's an increase of 15,000 forbearances that have increased amongst FHA and VA loans, whereas there's 14,000 and 1,000 additional loans in forbearance among private label securities and bank portfolios and the GSEs respectively. GSEs are government sponsored enterprises, which would be Fannie Mae and Freddie Mac loans. So they report that they have an increase of 15,000 amongst FHA and VA loans, but the share of loans that are increasing for Fannie Mae and Freddie Mac are increasing at much lower levels, only 1,000. And this is a common trend that we're seeing over the past several weeks here, where the VA loans and FHA loans are increasing in numbers, whereas Fannie Mae and Freddie Mac are not increasing, not nearly at the same rate. And we can see that here. So Fannie Mae and Freddie Mac, the share of loans in forbearance only equates to about 3.6%. However, when you look at FHA and VA, they're approaching almost 3 times that amount of 9.2%. Overall, right now, we have 2.8 million approximately loans that are currently in forbearance, and those numbers have been decreasing. So the number of active forbearances remain down 7% from the same time in October, and as of November 17th, there are 2.77 million active forbearances nationwide, down from a peak of 4.76 million in late May. And you can see that here. In late May, we had about 4.7 million forbearances in the US, but that number has been steadily declining ever since then. Black Knight also reports that 82% of active forbearance cases have had their terms extended. What that means is that people have entered into a mortgage loan forbearance for 6 months, and then they opted to do another 6 months extension thereafter. And they were able to do that thanks to the CARES Act, because you basically can put a pause on your mortgage payment if you have a federally backed mortgage and if you are having a financial hardship due to COVID-19. So 82% of those who have entered into forbearance have opted to extend their term for another 6 months. I expect to see that the forbearances will really start to taper off starting in about May of 2021, because May was really the time when we had peak numbers for active loan forbearances. So people who entered into forbearance can put a pause on their mortgage payment for 6 months and then do another 6-month extension. So about 12 months from this peak is when I expect to see a lot of these people or be exiting their loan forbearance. Okay, let's go to another report from Black Knight. This report was actually just issued today at the time of this video, and this is a first look at their October 2020 mortgage data. So we have some really interesting stats here to share with you. So mortgage delinquencies have improved again in October, falling to 6.44%, the lowest level since March, which a lot of people would agree this is the beginning of this pandemic. And despite 5 consecutive months of improvement, there are still more than 3.4 million delinquent mortgages. This is something I found very interesting because that's 600,000 more than this number here. This is the number of people who are actually in mortgage loan forbearance, which is around 2.8 million people, or 2.8 million loans, I should say. However, they're saying that there's 3.4 million delinquent mortgages. This 3.4 million would include those who are in forbearance, but that's 600,000 more than the active forbearance numbers. So I'm really curious, out of those 600,000 people or 600,000 loans, how many of those are able to go into a forbearance, or how many of those are not able? I'm guessing a large percentage of these are maybe loans that are not federally backed mortgages, that $600,000 difference, because the CARES Act only protected those who did have a federally backed mortgage. So it'd be really interesting to see how this number changes as a lot of people have exit their forbearance plans. In any case, they say that more than 3.4 million delinquent mortgages are out there in the US right now, and that's nearly twice as many as there were entering this year. So we have twice as many people who are delinquent mortgages. But keep in mind, about 2.7 million of these are just forbearance plans where people are able and legally able to enter into a forbearance and stop paying their mortgage. So serious delinquencies, which are loans 90 days or more past due, improved in October as well. But volumes remain at more than 5 times pre-pandemic levels. Again, a lot of these would be mortgage loan forbearances, so I don't really put a whole lot of weight into that. In addition, October's 4,700 foreclosure starts marked a nearly 90% year-over-year reduction as widespread moratoriums remain in place. Right now, we have a foreclosure moratorium until the end of this year, 2020. It says active foreclosure inventory set yet another record low of 178,000. I'm a real estate agent in Sacramento, California, and our foreclosures only represent about 1% of all our sales right now, and that's largely because we have this foreclosure moratorium in place. Black Knight also has some really interesting stats to share because they show the top 5 states by non-current percentage. So the states that have the highest percentage of loans that are not current, meaning they're delinquent loans. And those states would be Mississippi, Louisiana, Hawaii, New York, and Texas. Hawaii, I would imagine this is because of tourism. A lot of people are not traveling to Hawaii and other tourist destinations right now, and that could affect people's income in those states, of course. So the states that have the highest non-current percentage would be those 5 states. On the other side of the coin, the bottom 5 states that have the least amount of non-current mortgages would be Montana, Oregon, Colorado, Washington, and Idaho. In addition, Black Knight also reports the top 5 states that had the biggest improvement of non-current loans, and that would be New Jersey, California, New York, Michigan, and Pennsylvania. On the other side of the coin, the top 5 states that are going backwards are North Dakota, Wyoming, Nebraska, Minnesota, and Iowa. Okay, so that was the reports from Black Knight. Leave me a comment below if you have any questions regarding that. So let's go over a report from the U.S. Census Bureau and the U.S. Department of Housing and Urban Development. And they just issued this report just a few days ago. And this is their monthly new residential construction for October 2020. So these are stats for brand new houses, their construction phase in the U.S. So they break this down by building permits, housing starts, and housing completions. Building permits obviously is the very beginning phase of building a house where they're pulling permits to build brand new houses. And housing starts is the beginning of the construction phase of a brand new house. And housing completions is just that, houses that actually have been constructed. So I'm actually going to share some stats with you in just a little bit showing what single family houses have been doing versus multifamily construction. And it's very interesting to see these numbers. And also going to share some numbers as well about different regions and how those have been affected. In any case, building permits have been virtually unchanged from the revised September rate, but it's 2.8% above the October 2019 rate. This is a total residential building permits. That includes multifamily as well as single family. So when you look at only single family authorizations, which is a single family home, those are up 0.6% above the revised September figure. Then for housing starts, for privately owned housing starts, those are up 4.9% above the revised September estimate, but up 14.2% when you compare it to 1 year ago. Again, this is multifamily plus single family houses. But when you're only looking at single family homes, those are up 6.4% above the revised September number. So you can see here, single family homes for housing starts is 6.4% increase. However, when we look at a total increase, it's only 4.9. So multifamily construction is increasing at a much lower rate. Actually, in fact, in many cases, it's actually down. I'm going to share that with you in just a little bit. All right, when you're looking at housing completions, that is 4.5% below the revised September estimate, and it's 5.4% above the October 2019 rate. When you're looking at single family home completions, that is 3.4% below the revised September rate. So let's go over what we're seeing on a regional basis, especially when we look at single family versus multifamily. So this is again the permit issuing phase of the construction of a brand new house. So in the US for one unit, which would be a single family home, that's up 0.6% when you compare it to the prior month, but it's up almost 21% when you compare it to 1 year ago. On the flip side, when you're looking at 5 units or more, which would be, of course, multifamily, like an apartment building, for example, those are down 5.9% compared to 1 month ago, and down almost 31% when you compare it to 1 year ago. So what a drastic difference. For a single family home, the actual permit phase of the brand new construction of a home is up almost 21%, but multifamily, which is 5 units or more, down 31%. It goes to show that builders are really focused on building single family homes, as a lot of people are flocking to the suburbs where most houses are being built, and they want more space inside and out. Also, a really interesting stat here to share with you is on a regional level. So they have Northeast, Midwest, South, and the West. So in the Northeast, the total number of permits that are pulled for all residential housing units which would be multifamily and single family, would be down 13.5%. However, when you look at only one unit, it's up 20%. So it goes to show that even though the total is down 13%, for single family home construction, it's up 20%. This is the permit issuing phase. So it goes to show that multifamily is down significantly in the Northeast. And this is also across all the major regions as well. So in the Midwest, total is up 16.4. However, single family is up almost 20%. In the South, down 3.9. But single family up 21%. So almost all these regions in the US for the permit issuing stage of building a new house is up almost 20% for a single family house. Okay, let's look at housing starts in the US. So in the US for one unit, that's actually up 6.4%. However, when you look at October 2020 to October 2019, that's up 29%. We're also seeing housing starts in all the 4 major regions that they report on. In the Northeast, increased 41% compared to 1 year ago for housing starts for single-family houses, up 33% in the Midwest, and the South up 28%, as well as the West for single-family houses. But in total, they are actually much lower than the single-family building starts. So we're looking at multifamily is not being built as much as single-family houses. Okay, let's look at housing units completed in the US. So for one unit, they're actually down 4%. When you look at 5 units or more, so it would be residential apartment buildings, those are actually up 27.6%. These are actually units or buildings actually completed. So it's really interesting to see that it seems like builders were more inclined to build more multifamily units, as a lot of people want to live close to the city where they have the walkability. Seen going to restaurants and bars, for example. However, right now during this pandemic, a lot of people are moving to the suburbs because of work at home arrangements and want more space inside and out amid this pandemic. So right now, the housing units completed for single family houses actually down 4%. Also, when you compare it to 1 month ago, down 3.4%. So obviously there's a lag in the issuing a permit, starting the building phase of building a house to when the actual units are completed. So the construction of brand new houses, especially for single family, is really lagging behind right now. That is today's housing market update. So comment below with any questions that you have. Also, don't forget to click on the link below, because for a limited time, Webull is giving away 4 free stocks when you deposit at least $100 on their platform. That promotion ends on November 30th. Also, please subscribe if you haven't done so already. I post videos about how this pandemic is affecting our real estate market and really enjoy making these videos for you. Also, you can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day. I look forward to seeing you on the next video.